It is 9:32 a.m. Pacific Daylight Time. It's the 30th day of March 2026, and this is episode 1288 of Bitcoin. And with me, your host, David Bennett, bringing you all the Bitcoin news that you can use in macro from around the world. And there's quite a bit of it today. We're going to start today with Morgan Stanley. Bitcoin ETF is coming soon, and they've announced what their fee is going to be. And it's pretty serious, man. And speaking of serious, Trump talking seriously with Iran's new regime, whoever that is. I don't know. Nobody seems to know who the hell anybody anywhere is talking to anybody about anything, because I saw this morning there's this global index that talks about, is just a global uncertainty index, is literally what it is. And I've never seen it before, but it hit 105,000. And reading into the story, you find out that that's the highest the global uncertainty index has ever hit. And it's something like taking a poll of leadership in 42 countries from around the world, and then that's supposed to represent the global uncertainty index, and everybody is uncertain about the way things are going. In fact, this particular story, which I'm not going to read to you, it basically just says that this particular index score of 105,000 is 9/11, the Gulf War, the global financial crisis, and there was one other thing. COVID. That's right. Yeah, COVIDs. Yes, COVIDs. Yeah, all the global uncertainty index on all those, you'd have to add them all together, and you would still not hit 105,000. And honestly, it's because this is what I was talking about last week. Nobody knows what is going on. Who is this new regime? God, I hope we get to find out, because I would like to know. And then a poly market trader, ooh, he gets a lot of money, because poly market themselves made a pretty decent mistake. Well, not a decently sized mistake, let's just say. And then rate hike bets are up for the Fed and the Bank of Japan, but that could be problematic. And then Kalshi getting popped in the face by Washington State today. And then Strive and Tuttle looks like they want an ETF for Bitcoin, kind of, in a roundabout derivative sort of way. And then I want to talk about nsite a little bit. I've been hearing a lot of stuff about nsite, and I guess I took a week off in Oster, and I don't know what the hell's going on. So I reached out and I got some pretty relevant information about nsite. And then we're going to end with Canada. Looks like they want to propose a ban. I'll tell you on what at the end of the show. But first up, Morgan Stanley set to undercut Bitcoin ETF rivals with a 0.14% fee ahead of launch. Micah Zimmerman, writing for Bitcoin Magazine. Morgan Stanley is poised to shake up the spot Bitcoin ETF market with sharply lower fee structure, as new filings details show. Its upcoming Morgan Stanley Bitcoin Trust, the MSBT, will charge just 0.14% per year, undercutting every single existing United States competitor. The fee, disclosed in updated trust documents shared by Bloomberg analyst Eric Balchunas, comes in 11 basis points below BlackRock's flagship iShares Bitcoin Trust, which currently charges around 0.25%. The aggressive pricing positions MSBT as the cheapest spot Bitcoin ETF on the market at launch, signaling a deliberate push to capture both internal advisory flow and external investor capital. The move carries particular weight within Morgan Stanley's own ecosystem. This is a big number. With roughly $8 trillion in wealth management assets under under management and a network of thousands, and I think it's 16,000 financial advisors, fee sensitivity has been one of the barriers to broader ETF adoption across advisory channels. A lower cost in-house product could remove that friction, allowing advisors to allocate to Bitcoin without facing conflicts tied to recommending higher fee third-party funds. Industry observers say that dynamic could materially shift flow. Fong Li, CEO of Strategy, recently described the product as a potential monster Bitcoin catalyst, estimating that if even a modest 2% allocation across Morgan Stanley's platform could translate into roughly $160 billion in demand, and that figure would far exceed the size of any existing spot Bitcoin ETF, and underscores the importance of distribution, not just product design. The fee disclosure arrives as MSBT moves closer to launch. The fund had already received a listing notice from the New York Stock Exchange, a step widely viewed as signaling that trading could begin imminently pending final regulatory clearance. And if approved, the product would become the first spot Bitcoin ETF issued directly by a major U.S. bank rather than an asset manager. And structurally, MSBT mirrors existing spot Bitcoin ETFs. The trust will hold the Bitcoin directly, with Coinbase serving as custodian and prime broker, while BNY Mellon will handle administration, transfer agency, and cash custody. Since their debut in 2024, U.S. listed spot Bitcoin ETFs have easily attracted more than $50 billion in inflows. And we've seen over this past week, we've seen something like $290 million in outflows. But, hey, what are you gonna do? Nobody knows what the hell to do with their money. Literally nobody knows what the hell to do with their money. And here comes Morgan Stanley with 16,000 individual human beings, each representing hundreds, if not thousands, of regular Joes walking around the street, right? This is what they said. The importance of distribution. This figure far exceeds the size of any existing spot Bitcoin ETF and underscores the importance of distribution. Why did they use distribution? That word is important here. 16,000 individual financial investors from coast to coast. That is the distribution. That's like having 16,000 McDonald's franchises, 16,000 Jack in the Boxes, 16,000 Taco Bells, man. I mean, Morgan freaking Stanley is everywhere. They're everywhere. And this shit could list today for all we know. Well, actually, probably not today because the bell's already open, but could list this week. They might wait till next week because nobody knows what the hell's going on with money right now. So honestly, it's kind of a weird time to release something like a spot Bitcoin ETF, of course, unless they know something. And no, I don't know if they know anything. And I also don't know anything about these serious talks with Iran's new regime. Bitcoin gains on Trump's comments as analysts warn of geopolitical risk and ETF outflows. Naga Avan Nameo has this one for the block. Bitcoin opened the week pinned near the lower end of a recent range as traders weighed geopolitical risk, negative exchange traded fund flows, and a heavy slate of U.S. data that analysts surmise could impact near-term direction. According to the block's price page, BTC began Monday at around $66,000 before briefly dipping towards $64,000 during thin weekend trading. The dip extended a pattern of late week weakness followed by tentative rounds. Markets, however, found some footing during intraday hours after comments on Truth Social from President Donald Trump, who said the U.S. was in serious discussions with what he described as a new Iranian regime. Trump also said that a deal would probably be reached, while also warning of escalation if the Strait of Hormuz is not reopened. The remarks lifted risk sentiment modestly, with Bitcoin rising nearly 2% to change hands near $68,000, and shitcoin number one and its price, which I do not talk about. QCP Capital said in a Monday note that Bitcoin has continued to hold a $65,000 to $70,000 band despite persistent macro pressure, with price action drifting lower into weekends as positioning is paired before stabilizing at the start of the week. Still, the firm warned that upside momentum may remain limited after last week's post-options expiry sell-off, particularly with the conflict in Iran unresolved and markets approaching an April 6th deadline tied to the U.S. pause on strikes. Quote, the pattern has persisted through the month, QCP wrote, adding that sentiment remains fragile even as Bitcoin has outperformed gold and equities since this conflict began. Timothy Messier, head of research at BRN, described the current setup as finely balanced. Can you say knife edge? With Bitcoin entering the new week on a knife edge. There it is. As macro forces collide. Meanwhile, institutional capital recently retreated for the first time in 4 weeks. Bitcoin spot ETFs recorded $296 million in net outflows between March the 23rd and the 28th, marking the first negative week after a whole month of steady inflows. And then they talk about shitcoin number one. Per Messier's view, the shift matters because ETF demand has been supporting the recovery narrative. Quote, a reversal here shifts the burden back onto spot demand and short covering, BRN's analyst said. In the backdrop, macro conditions continue to dominate. Oil remains elevated. The Strait of Hormuz stays central to risk pricing, and upcoming U.S. data, including the JOLTS job report, retail sales, and then a Friday's job report, could reset expectations for rates. Quote, the near-term setup is fragile. Positioning is cleaner than sentiment, but conviction is still thin. The tone has been echoed across trading desks as well. Analysts at Laser Digital said markets are still reactive to headline swings from the Middle East. As such, rallies are likely to fade as negotiations stall and risk appetite stays muted. Laser Digital analysts also pointed to additional pressure from negative ETF flows and rising energy costs, warning that higher electricity prices could force miners to sell more Bitcoin, adding to supply. Quote, unless there is a clear picture of an off-ramp, it will be hard to find any meaningful movement, the desk wrote. And I think I'm taking this the term off-ramp as an off-ramp to this whole mess we got going on yet one more time in the Middle East. It's ever since the freaking 50s, ever since the 1950s, we have been dicking around in the Middle East. It's just, whatever. Anyway, at the same time, some underlying demand signals have held. Martin Gaspar, senior crypto market strategist at FalconX, noted that spot ETF flows earlier in March had totaled roughly $1.5 billion, suggesting longer-term capital is still entering the market. He added that recent price stability relative to equities and metals could reflect seller exhaustion, with fewer forced sellers after earlier drawdowns. Even so, the broader shift in positioning is clear, per multiple analysts. Investors are not chasing crypto higher. They are stepping back, they are watching macro signals, and they are leaning into yield as uncertainty around inflation, rates, and geopolitics persists. Okay, that's the end of the article. So that kind of gives you a snapshot of what a whole bunch of these analysts think. And it basically is just telling me that we don't know what's going on. We have no credible media outlets at this point. I don't believe what the Iranians say. I don't believe what Trump says. I don't believe what MSNBC says or CNBC or Fox or any of them. None of them. Whether they lean left or whether they lean right. I really do my best to stay right in the middle. I try to remain neutral, which is one of the reasons why I get in so much damn trouble by people who like Trump. And if you like Trump, that's fine. I am complete. I literally don't care. I'm not one of those people that's go, oh my God, I can't believe you voted for Biden. I hate you. You must be a commie. Or vice versa. I can't believe you voted for Trump. He's a fascist. Fuck. I don't give a shit. I don't care. The one thing that I care about here from this particular story is who is the new Iranian regime? Do you have any proof to give me that there is a credible structure in place that is wholly different than what came before? I think that's a neutral stance, that is a neutral question to be able to ask without freaking out either the left-hand side or the right-hand side of the political aisle. It's a good question. Who is the new regime? What are their names? Even if you say, I don't want to name their names, do you have anything else for me that I can grab onto? Because otherwise, I'm chilling out with the 105,000 global uncertainty index score because I'm uncertain as to what the hell's going on. And not even in betting markets do we know what's going on. Polymarket trader exploits UFC blunder and turns $700 into $67,000 in under 1 minute. Omkar Godboll from CoinDesk. A trader pulled off a nearly 100x return on decentralized betting platform Polymarket in less than 1 minute, thanks to a blunder by UFC announcer. In Sunday's UFC heavyweight bout, Tyler Fortune beat Marcin Tybura to secure his very first UFC victory, but the event was not without drama. Cage announcer Bruce Buffer initially read the result in favor of Tybura, a result that stood for less than 1 minute before Buffer corrected the mistake. Llama Enjoyer, a Polymarket trader also known as Verissimus on X, capitalized on the error, turning roughly $676 into $67,000. When Tybura was named victor, his shares spiked towards 99 cents and Fortune's collapsed to about 1 cent. Llama Enjoyer said they almost placed a $100,000 bet on Tybura at 99 cents, but stopped when they realized something was wrong. Instead, the trader bought $676 worth of Fortune shares at 1 penny. Seconds later, when the UFC corrected the announcement and the shares immediately jumped to $1. Quote, I almost bought Tybura at 99 cents with $100,000. Stopped, realized something was wrong, canceled my order, scooped up 1 penny shares instead. The UFC corrected the winner seconds later. Easiest 100x ever, Verissimus said on X. Man, talk about cutting it close. Llama Enjoyer's quick thinking illustrates just how fast prediction market prices can swing during live events, especially when big announcements are misread or misreported. The incident also raises questions about how payouts are handled when there's an error at the source of truth, the reference that contracts rely on to settle outcomes. Since the error originated from the UFC announcer, there could be a dispute over payouts or contract resolution, even though the trader's actions remain fully legitimate. So how do you think that this is going to go? You think that Polymarket's going to go, no. And even if they do, or even if they don't, a further question remains. How do you handle shit like this? Especially because they're saying they made the correction seconds later, like literally within a minute. But the outcome is very, very clear. The other guy won, and they announced the wrong dude. So how does Polymarket square all this? Because if they can't square it, I can almost guarantee you, I hear Elizabeth Warren picking up her phone right now to start yelling at people. Be careful with these markets, these Polymarkets and Kalshi stuff. Be extraordinarily careful about that. And, get yourself clean with handmade tallow soap from my friend SoapMiner. He's part of the Circle P. The Circle P is open for business. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services, but you will buy it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P, and SoapMiner is in the Circle P at SoapMiner.com. That is SoapMiner.com. He sells handmade tallow soap. He's got cedarwood tallow soap. This soap is my favorite soap. I've tried a lot of soaps from SoapMiner, and this one right now is my favorite. I have one more bar from the goodie bag that SoapMiner sent me. I've got a pine tar tallow soap bar that I have not yet used. So right now, the clear winner for me, if I'm betting on Kalshi, is SoapMiner's cedarwood tallow 5-ounce bar. You can get it for $8. But you're going to be buying it in Bitcoin because SoapMiner sells all of his goods for Bitcoin. And he's also said that a lot of people have told him that cedarwood tallow is their favorite. But if you don't like cedarwood, they got pine tar, he's got lemongrass, he's got goat's milk, he's got lavender, he's got tea tree, he's got peppermint, he's got rough cut, which basically is there's no scent in rough cut. It's just 3 ingredients: 100% grass-fed beef tallow, distilled water, and lye. That's soap. That's all soap ever was. That's all soap ever needed to be. And that's what SoapMiner at SoapMiner.com will deliver to you. Pure soap, the way your great-great-grandparents used to make. Probably out in the backyard after they butchered a pig. He's also got Earl Grey tallow, which until cedarwood was also my favorite bar of soap from SoapMiner.com. Go to SoapMiner.com. Make sure you use the code Bitcoin and for 10% off of your total purchase at SoapMiner.com. Use the code Bitcoin and. Rate hike bets are building for the Federal Reserve. And now the Bank of Japan too. Oh God, no, please. CoinDesk. James Van Straten is writing this one. Prospects of interest rate rises are no longer just the United States story. Traders are now betting the Bank of Japan could tighten too, as the resource-scarce nation faces inflation risks from the ongoing Iran war. Traders see a roughly 69% chance of the BOJ raising its benchmark borrowing cost at the April 28th meeting, according to data tracked by Bloomberg. Action in options tied to U.S. interest rates show traders expect the Fed to raise borrowing costs in the coming weeks. BOJ's policy meeting summary released Monday showed one member calling for a bigger rate hike in response to the conflict in the Middle East and its inflationary impact on Japanese society. Comments also noted that any move would factor in incoming economic data and anecdotal signals from the market. The Federal Reserve's tightening is a well-known headwind for risk assets, including Bitcoin. But the Bank of Japan can be just as impactful. Years of ultra-low rates encourage traders to borrow in yen and invest in higher-yielding markets, which is the so-called yen carry trade, keeping borrower costs suppressed globally and greasing rallies in risk assets. So a shift toward tighter policy in Tokyo could reverse these flows, sending ripples across markets and potentially deepening the crypto bear market. The BOJ has already raised its interest rate to 0.75% from negative 0.1% over the past 2 years, while simultaneously ending its massive asset purchase program. Yet, rates in Japan remain significantly lower than the 3.5% seen in the United States. The bank therefore has plenty of room to hike if the Iran crisis worsens, potentially driving higher energy prices and imported inflation in Japan and other oil-dependent countries. But it's easier said than done, because hiking rates will be challenging given Japan's strained financial and fiscal situation. The country's debt to GDP ratio stands at a staggering 240%, meaning higher rates could sharply increase borrowing costs and strain government finances. Economists have said that Japan is caught between a rock and a hard place. If it hikes rates and allows government bond yields to rise, it could put Japan's debt sustainability at risk. If it keeps rates low, the yen will likely depreciate significantly, adding to inflation concerns. Strains are already evident in the foreign exchange market. The Japanese yen continues to weaken and is currently just around 160 per US dollar. That's its weakest level since mid-2024. The Japanese yen has depreciated by 54% since 2021. Yike. Holy shit. That's, yeah. But they're right there. They're talking about that it could really, really hurt the Bank of Japan. And yes. But what they didn't say is like, the Fed ain't exactly in the best place either. Rolling over those bonds and paying higher interest rates on our own debt is in the midst of cutting. We've already spent like somewhere north of $200 billion on this Iran business. They're going to have to print that. And it's going to add to the debt. And they're going to issue more treasury bonds and bills, which already had pretty dismal auctions this last time. It was not a good auction for United States debt, right? So now they got to find some money to prosecute this war further. And if they raise rates, the interest payments on all this shit becomes really bad. Really, really bad. So I'm not saying that I don't believe that the Fed would hike rates. Yeah, they would. It's just going to be very, very painful for them to do so. I kind of expect them in the coming weeks, like at their next 2 meetings. I don't think they'll raise rates. I don't think they'll lower them, but I don't think they'll raise them. I think they'll keep them the same. Anywho, let's run the numbers. CNBC futures and commodities, Brent North Sea is actually down a half point, but it's still at like $112 a barrel, which is not good. West Texas Intermediate up 3.41% to $103.04 a barrel. Natural gas diving 5.5 points to the downside. $2.85 per thousand cubic feet right there. Gasoline is up 3% to $3.34 a gallon, and Murban crude is up 2.25 to $119.79. Now, natural gas. This is going to be kind of a weird story for natural gas in the coming few weeks because of this. One, we're seeing the 5.5 point drop because weather is going to be warmer across the continental United States in general, which means we don't need to burn as much natural gas either in our heating systems directly or to burn for energy to power heating systems that run off electricity. However, South Korea and Japan, Japanese and South Korean businessmen, let's just say that, are all over Houston, and they are cutting deals with Texas energy companies to buy liquefied natural gas. Now, this natural gas price is not the price of liquefied natural gas. This is just natural gas. And then it's got to go through a whole process where it gets put into liquid form, where it's basically, more or less stable and not in a gaseous format. That's a completely different animal. However, the input is the same. Natural gas is used clearly to make liquefied natural gas. Right now, these natural gas prices are pretty damn low in comparison to all the news that we've heard about, like the Qatar, their liquid natural gas export has basically been dropped to zero because of bombings by Iran and all kinds of other shit. Japan is running out of liquefied natural gas. South Korea is running out of liquefied natural gas. As far as gasoline goes, Australia saw 500 gas stations close down because they were out of gasoline. This isn't liquefied natural gas, obviously, but still. These things are starting to rack up quick. We really need a resolution to all this. I would be happy with $70 West Texas Intermediate if we could get it, but we're not getting it. But metals are doing well today. Palladium is up 2 points. Gold is up 1.12 to 4,542 and 9 dimes. Platinum is up 1.18%, and silver is up 1.5 to $70.90. Copper is up 1/4 of a point. Ag is fully mixed today. Biggest loser is sugar, 1.21. No, oh shit, no, it's coffee, 2.7% to the downside. Biggest winner is rough rice, 1.94% to the upside. Live cattle is up 1/4. Lean hogs are down 1/4. Feeder cattle are up 1/4. The S&P is up 0.16%. The NASDAQ is down 0.12. The Dow is up 0.5 point. That's like 236 points right there. S&P Mini is down 0.13. This kind of tells me that either one of two things. People really don't know what the hell to do with their money at this point. They don't know if they should sell and go into something else. They don't know if they should stay. So you get this, we always talk about the fight or flight response. It's either one of the two. There's also freeze, where you just don't know what to do. And you can't make a decision to either fight or run away. And I think that's one issue, or at least that's one possibility here. The other possibility that I see, somebody knows something. And maybe there is a new Iranian regime and they are credible and we do know who they are and Trump really is talking to them, and who knows. But we are certainly not included in that intelligence. So we'll move on to $67,210. That's the price of Bitcoin. That's a $1.34 trillion market cap. Yet we can purchase 14.7 ounces of our favorite shiny metal rock, of which there are, with our one Bitcoin, of which there are 20,009,001.16 of, and average fees per block are normal 0.02 BTC, taken in fees on a per block basis. There's 20 blocks carrying 36,000 unconfirmed transactions waiting to clear at high priorities of 3 sats per VByte. Low priority gets you in at 0.6. People are mumbling about hash rate. I saw an article on Cointelegraph today saying, oh my God, the Bitcoin hash rate is falling and it can't get up. And yet we are still at 1 zettahash per second as the measurement of the hash rate on the Bitcoin network, which is what it takes to secure all of our transactions and make sure that we don't get double spent and all the goody good stuff that we get from Bitcoin. Hash rate is what makes sure that that's enabled, that we can't double spend each other, that we can't just, create new Bitcoin into existence. So I think it's purposeful FUD is what I think that they're trying to go for here. From Cracking Up, which was Friday's episode of Bitcoin and let's see who loading in. Ooh, Jay with 12,600 sats says finally caught up again. Thank you, sir. No, Jay, thank you. Nick Dose with 10,079 sats says cheers. Cheers right back at you. Nick Dose again with 1,079 says cheers. And again, right back at you. Jason High with 250 says boost. Richard Whitman with 200 says, you don't hate Coinbase enough. I agree. Nick Dose with 180 says cheers. Noster Gang with 100 says nothing. That's all the boost that I got, which was a lot more than Friday. So I really appreciate you guys coming out of the woodwork to support the show. Again, 5-star reviews are also very, very, very much requested and appreciated here at Bitcoin. And it really does move the needle. It really moves the needle. I've been seeing some of my numbers come up for the show's visibility in general across, I track 4 different platforms, and it's been a slow grind for me here at the Bitcoin and podcast because I don't get to go to the conferences. I don't get to schmooze with the people over at River. I have to do this by myself, sitting here giving you the news that you can use every weekday. And I've been doing it for 8 years. So not only are your donations to the show important and appreciated, those 5-star reviews on Apple, and the last one I got was like last December. Yeah, last December. I got with December 17th, 2025. I've got like almost 50, maybe 60 of these things now. And if you could carve out some time and just go over to Apple, find my podcast, and give me a 5-star review and say something good, like actually use words, because otherwise, like if you just put in like 5-star and good show, that rating doesn't actually have as much oomph as some of the other ratings with like a full description of why why somebody gave me a 5-star rating. Like a couple of sentences is usually what it takes, because the algorithm seems to search for that. In either event, I think I might actually do something that I maybe some people will think this is terrible of me, but I actually don't think that it's so terrible. So let me ask it right now as a question, and you can hammer me to death on Nostr. What if I paid 5,000 sats for a 5-star review with verbiage in the review, not just 5-star and good show, like actually, why do you like the show? And you give me a screenshot, and I give you 5,000 sats if I see that same review on my dashboard on something like Apple. Which in Apple, the 5-star reviews on Apple are the most important. It's not Spotify, YouTube, not as important. The Apple podcast review, that's the one that's important. So I'm going to posit that as a question. Is it completely douchebaggery of me to do that? You let me know over on Nostr, and I'm also on Twitter. I can't even remember my Twitter handle. I go there to post show notes or post the episode, and that's about it. I said something about it on Nostr yesterday. Every time I go to Twitter, I get roped into some of the most horrific, heinous, negative mental crap, and I literally have to run back to Nostr to see somebody posting happy things. And if you dispute that there is a complete mental difference between X and Nostr, then go from one to the other and read 5 from each and see what you think. I guarantee you your mental health will be much better on Nostr. That's the weather report. Welcome to part 2 of the news that you can use. Kalshi legal woes grow with Washington state gambling lawsuit. Robert Lankin from Cointelegraph has this one. Kalshi is facing yet another state-level lawsuit after the state of Washington on Friday filed allegations that the prediction market operator violated state gambling laws with its products. The Washington Attorney General's complaint cites the Pacific Northwest state's existing ban on online gambling and otherwise strict oversight of the gaming market, in claiming Kalshi violated the Washington Consumer Protection Act, the Gambling Act, and Recovery of Money Lost at Gambling Act. Quote, Kalshi's website and app show consumers a range of events that they can bet on and the odds for those various events, which dictate how much the bettor will be paid out if the event occurs, an announcement from Attorney General Nick Brown said. Quote, this is exactly how sportsbook and other gambling operations function. Yes, it does. Kalshi advertises that they allow consumers to bet on anything by simply calling their service a prediction market rather than gambling. The definition of gambling under Washington law is staking or risking something of value upon the outcome of a contest or chance, a contest of chance or a future contingent event. And Kalshi's activities fall squarely within that definition. The AG's announcement said, quote, each Kalshi bet risks money, relies in part on chance, and promises a payout to winners, end quote. Kalshi immediately sought to move the case to federal court saying in its filing that the issues raised by the Washington suit are already being litigated in other federal courts and that there has been no warning or dialogue from Washington State prior to the lawsuit. And this goes along with what's going on in Nevada, who earlier this month temporarily blocked Kalshi from operating in that state. Carson City District Court Judge Jason Woodbury issued the temporary restraining order on Friday, siding with the Nevada Gaming Control Board motion to block Kalshi from operating in its state for up to 14 days. Kalshi's argued that its contracts are under the exclusive jurisdiction of the United States Commodities Futures Trading Commission, an agency that has backed prediction markets that are fighting in multiple state courts over accusations of offering illegal gambling. And then they talk about Arizona Attorney General announcing their ban. And I mean, they're just getting, Kalshi and Polymarket are just basically getting bitch slapped every single way that you can. Why? Because it's gambling. It just is. Okay, now, I said last week that maybe under certain circumstances, maybe there are some of these markets that do actually uncover the truth before the truth is unveiled to the world. I will admit that I can be wrong, but this is gambling. It just is. I'm not a fan of Washington State. I live here. I live literally on the edge. I mean, I can drive to Idaho to buy gas where I don't have to pay a 50-cent per gallon green tax or carbon tax. And I do. I will literally drive my happy ass over the border and fill up in Idaho so I don't have to pay 50 cents more per gallon of gas. It's ridiculous. Anyway, but the Washington State Attorney General is correct. I'm sorry, but Kalshi and Polymarket, it's gambling. It just is. Whether you like it or not, it's gambling. All right, but we've got gambling everywhere. We've got gambling, like everything is a fucking gamble. Why can we gamble on what we think a stock is going to do by buying that stock and getting paid out when if it rises and we cash out, we get money. We made a bet. It's gambling. And these guys are gambling too. From the block, Daniel Kuhn, Strive, and Tuttle file for ETF to invest in Strategy's preferred STRC stock and Strive's SATA. Major Bitcoin treasury company Strive is teaming up with investment advisor and ETF issuer Tuttle Capital Management on a new exchange-traded product, according to a U.S. Securities and Exchange Commission filing on Monday. The T-Strive Digital Credit ETF is looking to invest in preferred equity securities issued by Bitcoin treasury firms, namely Strategy, the largest global Bitcoin holder, and Strive, which recently entered the top 10 largest corporate Bitcoin treasuries by number of Bitcoin. Both Strategy and Strive issue preferred stock equities, a type of sister stock to raise funds for their Bitcoin buying endeavors that are made attractive by paying out a healthy monthly income designed to adjust to keep the stock's price relatively stable. Strategy Incorporated Variable Rate Series A Perpetual Stretch Preferred Stock, the STRC, currently pays 11.5% in monthly dividends while maintaining about a $100 strike price. Strive, inspired by both Strategy's Bitcoin treasury plans and the preferred stock offering, issued the Strive Incorporated Variable Rate Series A Perpetual Preferred Stock SATA, bumped up SATA's dividend to 12.75 earlier this month, that's percentage points, while also targeting a price range of between $99 and $100. In January, Strive announced plans to raise an additional $150 million through a secondary public offering following its oversubscribed $160 million SATA IPO in November when the stock was first introduced. The new T-Strive Digital Credit ETF, if approved, would trade on the CBOE exchange under the ticker symbol DGCR. Now, according to the prospectus, DGCR would not directly invest in Bitcoin and would use swaps and leveraged to amplify its income exposure to both STRC and SATA. A leveraged ETF uses financial derivatives and debt to amplify the daily returns of an underlying security. The filing did not list a management fee amount yet. Tuttle's Matthew Tuttle would serve as the primary portfolio manager, and Strive Vice President Chris Nicholson named as sub-advisor according to the filing. Strive holds a healthy amount of Bitcoin, 13,310.9 BTC as of March the 11th. The firm in the past several months accumulated 5,886 from initial PIPE proceeds, 5,048 from its acquisition of Similar Scientific, and 2,694 BTC from other capital markets activities such as the SATA IPO, at-the-market programs, and follow-on offerings. Tuttle has steadily increased its exposure to crypto, including by launching several funds tracking exposure to major tokens like, God forbid, XRP and Solana, Bitcoin infrastructure firms like Galaxy and Bitmine, and other related strategies. It also oversees more exotic thematic ETFs such as the UFO Disclosure ETF, which invests in firms supposedly standing to benefit from the United States government confirming extraterrestrial activity, and the Top Gun Fund. Oh my, we live in a circus tent. Last year, Tuttle filed to list leveraged ETFs tracking President Donald Trump and First Lady Melania Trump's meme coins, though the funds do not appear to have gone live. Yeah, I wouldn't send them live either. Okay. So I want to read this sentence, and I want to ask a question about it at the end. A leveraged ETF uses financial derivatives and debt to amplify the daily returns of an underlying security. Now, here's my question. What was not said? It can amplify the losses. It can amplify the losses too. Derivatives and debt amplify everything, not just returns, but losses. I think that the author was remiss in this story by not saying that, because I know it seems easy for people that, you know, like the listeners to this podcast probably already understand that there's also losses involved. But out on the street, there's a lot of people that all they see is, amplify daily returns. They don't see the loss part. I think that they were remiss in not including that. Okay. Nsite. Nsite. It's Nostr based. So we are going to Nostr land for the next few moments, okay? I kept seeing this. I kept seeing like people like Alex Gleason on Nostr saying, I think it's great that I get alerts when somebody publishes an insight. And that was the first time that I saw the word insight. And I'm like, did I miss something? Because I may not post all the time to Nostr, but I look at it all the time. I didn't see shit about insight. Nsite. So this morning I asked, so will somebody please tell me what the hell all this insight stuff is? And I was sent to nsite.run. Now, this is spelled differently. NSYTE.RUN. Insight with a Y.run. And it says, what is an insight? An insight is a website published to the decentralized web using the Nostr protocol and Blossom servers. Unlike traditional websites that rely on centralized servers and DNS, insights are censorship resistant. Your content is distributed across multiple relays and servers. It's self-sovereign. You control your keys and your content. It's resilient because there's no single point of failure. If one server goes down, your site remains accessible. It's also addressable by a public key. Your site's address is your Nostr public key, your npub. So here's the thing, is that the it is websites published using the Nostr protocol. It's a website. An nsite is a website. I could publish a website today as an nsite, and it would be available to anybody that can get to the URL from anywhere in the world, right? Except Nostr protocol's it's a little wonky. It can be, depending on what your relay setup is, which relays you're publishing to, and which relay somebody who wants to see your website is receiving from. It could be a little wonky. I think that all of that's going to get better in the future because things do. Could you imagine using a first generation iPhone today? Probably not. Does that mean that iPhone should never have persisted this long? Of course not. The iPhone that I've got is actually, needs to be replaced. It's years old, yet it's a wonderful machine. It does everything that I need it to do. It certainly is not a first generation iPhone. So the whole thing about, oh my God, Nostr, it's so slow, it's so clunky, it's this and it's that. It's like, yeah, go back and use a first generation iPhone today, if you can find one, and tell me what clunky looks like. So from that standpoint, I think we just need to take a deep breath and say, okay, how do we make everything better? That said, having a website on multiple Blossom servers that you can publish to, like I publish to like my website every day. Well, I haven't published to my own website every day in quite a while, which is, again, I'm being remiss on that standpoint, but you get my drift. I can add a page. I can, add an update. I can change a picture. I can do all kinds of shit. And all of a sudden I get to do this on the Nostr protocol, which has a lot of features that I like the fact that it's not dependent on DNS. This is really much more important than I think anybody can imagine. So how would one go about publishing an nsite? Well, this one is nsite.run, but this URL is spelled nsite.run. It's very confusing. I know. There's two nsites, one spelled with a Y, nsite.run, and one spelled with an I, nsite.run, but just bear with it, because nsite with an I.run is where you will go to actually publish your website. So how does it work? You drop a folder or your archive that contains your entire website. The tool scans for sensitive files and warns you before uploading. Then you hash and upload. Each file is SHA-256 hashed and uploaded to Blossom servers. Files already present are skipped. Only changes are uploaded. And then there's a publish manifest, a signed Nostr event of kind 15128 maps your file paths to their hashes. Gateways query this event to serve your site. So a whole website using nothing but the Nostr protocol that is reachable outside of Nostr. Kind of. A little bit, I think. I'm not sure. I haven't, there's part of this story isn't clear to me at the very end. Like if I just give my nsite URL to my wife, does she have to be on Nostr? Or can she get to it from anywhere without having anything to do with Nostr? If that's not the case, then this isn't as fun as I think it's going to be. If that is the case, or will become the case, that anybody, whether they know what Nostr is or not, can get to my website that is published on Blossom servers via the Nostr protocol, well, honey, then we got something. Because it's going to be very, very difficult to shut me up if you can't shut down my address from a DNS or blacklist my address, my IP address. It'd be very, very difficult to do. So I'm hoping, beyond hope, that the way that I'm thinking about this is correct. I will dig into this a little further and report back what I find. Finally, for the day, in Canada, Crypto political donations ban proposal. Atlas 21 writing this one. The Canadian federal government introduced Bill C-25, known as the Strong and Free Elections Act, on March 26th, 2026. The measure, presented by House Leader Stephen McKinnon, proposes a ban on cryptocurrency donations to political parties, candidates, writing associations, and third parties engaged in electoral advertising. The bill places crypto on the same level as money orders and prepaid credit cards or debit cards, classifying them as payment methods that are difficult to trace. McKinnon justified the measure by stating that, quote, these targeted priority amendments address the recommendations of the Public Inquiry Commission on Foreign Interference in Federal Electoral Processes and Democratic Institutions, as well as those of the Chief Electoral Officer and the Commissioner of Canada Elections, end quote. Canada had authorized crypto donations in 2019, treating them as non-monetary contributions similar to material goods. However, no major federal party has ever publicly accepted them, and no crypto donation was declared in either the 2021 or 2025 federal elections. Canada's Chief Electoral Officer, Stéphane Perreault, I guess is how you pronounce it, had initially favored stricter regulations rather than an outright ban. In a post-election report from June 2022, he had recommended that all crypto contributions be received and reported regardless of value, eliminating a provision that assigned zero value to donations below 200 Canadian dollars from non-commercial vendors. And by November of 2024, his position had evolved toward calling for a complete prohibition on the grounds that the pseudonymous nature of crypto makes identifying contributions fundamentally difficult. Bill C-25 is the second attempt to introduce this ban. Its predecessor, Bill C-65, contained identical provisions but lapsed when Parliament was prorogued in January of 2025, and the new bill has completed its first reading but must still go through further readings, committee review, Senate approval, and royal assent before becoming law. That's a long road to hoe, people. The proposed penalties are severe. Recipients of crypto donations in violation of the ban will have 30 days to return, destroy, or convert the funds and remit them to the receiver general. Administrative penalties may reach twice the value of the contributions received. The bill also introduces a general increase in maximum fines. Penalties for individuals will rise from $1,500 to $25,000 Canadian dollars, while those for organizations will increase from $5,000 to $100,000 Canadian dollars. And the timing is significant. Canada introduced Bill C-25 just one day after British Prime Minister Keir Starmer announced a moratorium on crypto donations to political parties in the UK, citing risks related to illicit finance and foreign interference. A cross-party parliamentary committee had called for an immediate ban in mid-March, describing crypto donations as an unacceptably high risk. The coordinated moves by Canada and the UK highlight a growing divergence with the United States, where the Federal Election Commission has permitted crypto donations since the year 2014. And industry-linked super PACs have become a decisive force in American politics. During the 2024 electoral cycle, the crypto sector spent over $190 million through vehicles such as Fairshake, which became the largest super PAC of the cycle with over $200 million raised. And in the United States, no federal ban on cryptocurrency donations exists, although several states have introduced restrictions at the local level. So there you go. Canada wants to ban all of it because Keir Starmer said so. But it's got a really long row to hoe. It really does. It's a long way. It's just in its preliminary readings at this point. So God only knows when they get this through. And I love the last part, royal assent, because apparently the king still has to sign off on this whole thing. I keep forgetting that England's royal family has final say-so of what goes on in Canada. And I always forget it. And I feel like an idiot when I always feel surprised that that actually is still a thing. You know, the king at this point could dissolve parliament. The queen has done it like at least once before she died. I can't remember the last time she did it, but she basically said, oh, nope. And all of a sudden, here's the entire country of Canada on the other side of the world going, yes, ma'am, we'll do it. I don't know. Nobody knows what the hell's going on. That's the theme of the show. Nobody knows what's going on. And we've all got to live throughout this day and into the next. God help us all. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.